What's going on, guys? JPA Trades here. Going to be going over just a little piece of advice that I think a lot of people don't know, and that's just position sizing. And I'm going to be using the AMD trade as an example. So I'm going to basically tell you what I saw in AMD and why position sizing made it capable of me to. I always joke with the diamond hands, and diamond hands is kind of just if you're prepared to take the trade correctly, it's easy to say diamond hands. If you're oversized or overpositioned, it's really easy to really panic quick and things really you start sweating, you start letting your emotions get involved, you kind of start that little bit of panic. So with that, I just kind of want to give you another quick little example of position sizing. I'm sure you guys have beat this into your head by now, but I just want to go over it one more time. So let's say you took this AMD trade, put $2,500 in. So you said, all right, here's my $2,500. I'm going to use a 20% stop loss. So if I lose it, I lose $500. So you buy this AMD trade, goes down 20%. I think it was negative 30% at market close. So let's just say from purchase price, 4 hours later. So before market close, you get stopped out. So that kind of sucks. So you lose $500, but that's okay because it's only 20%. So let's say you see AMD again and you buy it the next day. And well, what happened the next day was it chopped down again, even though it kind of respected our pattern. I'll get into the pattern again. So you actually hit the 20% stop loss twice. So now you're down $1,000 on this initial idea. But let's just say you only did it one time. And so you're out $500. And conversely, let's say you timed it perfectly. So you put your $2,500 in, but if you're going to use that 20% stop loss downside, more than likely you're going to see profit taking earlier. So you'll see that a lot, either just from on Twitter or anywhere else. You'll see, oh, bought here, got stopped out, but I saw the position run 1,000%. Well, if it runs 1,000% and you're not there for it, there's not really any point. I mean, it's great that you have that really good process where 20% out, you stop, and 20% up, you take gains. But so much, and again, this isn't really this is just what works for me. This isn't really any hardcore financial advice, but what has tended to work for me is you need to be in a position to really, really hit those big out of the park runs. And in the meantime, same as counting cards in Vegas, like the house, you want just a slight advantage. So if the house wins 48% of the time and you win 52% of the time, just keeping that cycle churning. And then when you hit those huge wins, those 1,000%ers or those nuclear ones I always put on Twitter, when you can get those huge wins, it starts setting you so far up so that way your initial investment can increase and increase. And luckily, we've actually been doing pretty good lately with, I think we're on like 4 or so in a row. But the more consistency always helps, but being in a position to not get shaken out is also huge. So let's say you took this $500 with our AMD trade. Our AMD options ended up going down 80%, and I saw some people went and bought more and ended up making huge profits, and that's great. But you're down 80%, but even if you would have sold down 80%, you would have only been down $400. So it's all about perspective and what you want. If you were comfortable losing $500 to start with, maybe you only put $500 in, and then you don't care what happens. You're like, a stop loss is 0 because there's not enough cash to get lost. And then since there's such a few positions out there, you're more willing to have that profit taking much, much higher. So I just did a max runner. So let's say you make it to 400%. Usually I'll let a runner go almost all the way to the end. And of course, they might always not be 400, and you might hold longer than 100. But there's the profit taking and max runner, as I'm just saying, if you're more cautious, you're likely not going to be able to hold it as long. And if you're more advantageous, you're likely to hold it longer. So from that, you can see that, well, if you make 400% on that position, you're profiting $1,500 on $500. And if you sell out at 100%, you're making $1,500 on $2,500. And both of those are very great numbers. Like, that's a really great return either way. It's just you have to understand, okay, am I getting into this trade as this is a stop loss, is all I want to lose? Or am I getting into this trade as, hey, I want to let this idea play out and see what happens. If I'm right, I'll be really right, and if I'm wrong, I'm stilling out the same percentage. So hopefully this kind of graphic here, I don't need to overcomplicate anything, because I'm not here to sell you on any crazy YouTube video theory. I'm just kind of here to orchestrate my ideas as crazy or smart or whatever you think they are. So here's kind of what, this is right after I took the AMD trade. I posted this chart. So I said, hey, it kind of looks like an inverted head and shoulders possible basing spot. And of course it ended up going a little bit lower, and I'll pull up the chart and show you, but I was like, really kind of liking what we look here. We also had essentially this earnings seasons, every company that guided down, there ended up being a positive reaction in the sector later. So that was another reason going for AMD, where I really want to see how NVIDIA plays out. And I mean, NVIDIA's earnings wasn't great, but the sector's reaction was. So kind of history doesn't always repeat, but it often rhymes type deal, like you always hear. And I mean, always, it's easy to look back and say how right you were in the past, but I think it ended up playing out pretty good, and I'll kind of get into it more. So here's where it came the whole way back from our all the way dead to oblivion, and I ended up taking profits at around plus, I think it was like 1.15 is where I took my profits on it. And then just kind of show our entry was 79 cents. So it went down to like 15 cents, and a lot of people here kind of all the panic and the different reactions and blah, 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 and then all the funny things. And I mean, I'm here for it. I'm always up for a good feedback from the community. Make sure my head doesn't get too big and I start doing anything too stupid. So here's kind of the daily view of AMD, and I'll just kind of quickly draw that head and shoulders I was looking at. And it actually would have been a lot smarter to wait a little longer. So I'll just kind of take where that base is here. So like 89, that's the same thing. I was kind of thinking like 90, but I wasn't sure if it would make it down there. And of course it did. So sometimes you get a little jumpy and you want to get in positions early, especially when you haven't done anything in a while. But it's usually better to hold out for your idea. So I agree, I could have timed my entry a little bit better. It's always good to kind of look back at your plays and say, hey, what could I have done to improve my entry on this position? And I agree, I could have waited probably a little bit close. I think we ended up taking it at like 93, which I thought we were going to recover faster. That was I was too advantageous on it. We could end up profiting much, much higher. I could have just waited till that 90 came a little bit closer, but it seemed like just on that day we were going to go, and just got faked out by it, but I still kind of trusted the pattern. So here, we'll clear this out. And this is TrendSpider, by the way, if you're interested in this charting software. I'll put a little link. Shameless plug right there. But yeah, like I was saying, so here was that kind of big rejection on our sell day. So the inverted head and shoulders pattern we were looking at before kind of isn't the same. So I'm not as obsessed with AMD again going into next week, but again, a lot of people like to go with the trend. I kind of go against the trend with smaller dollars. So when reversals happen, like same way, the trend would have told you to buy AMD the day before we sold off on Friday, and then you would have got smoked Friday. But if you would have inverted the trend or fought the trend, or however you want to say it, your puts would have won up massively. So you have to understand, when you go against the trend, you have a much higher percentage of gains, but a higher risk of failure. So if you're willing to get a 500% gain, how many times are you willing to let your position go to zero? So if you win even 50% of the time, you're still profiting about 200%. So just taking those negative 100% out. So it's one of those things where you really have to understand your whole portfolio and what you're getting into, and then the whole diamond handings, the whole how can I not panic, how can I hold through these positions, how do you not sweat it? It's because you need to look at everything as a whole. So I hope this helps you guys. If you made it to the end of the video, why don't you leave a like, tell me what stock you're looking at this week, and I hope you all crush it. So thank you.